Welcome everybody, Doug McKay, antiwallstreetguy.com on the 8th, Friday the 8th of April 2011. We are looking at, we start off each week with a chart of either the SPY or the S&P 500 cash. So today we're looking at the S&P 500. We closed on Friday at 1328. What I've done here is I've drawn in a channel. The top end of the channel is resistance, the lower end is support. This is kind of the area that we want to hold. As we mentioned over the last couple of weeks, is if we could mirror this left shoulder of congestion over here to the right and maintain that channel and then break out of the channel, that would be a bullish sign that the market's probably going to take a run, meaning the S&P possibly at 1400. Now, if we start to break down through 1310, at that time we've broken support and we've also broken the 50-day moving average. We would get very defensive there. But again, next week we don't know where earnings are going to take us. It's not the earnings, it's how the market reacts to the earnings. We could possibly come down. There's a slight gap here. We could fill that sometime next week and then head up through 1340. So we'll see. But the overall trend right now looks good. A little bit of a fade this week. We'll see what happens next week when earnings kick in. The Dow chart looks a little bit better. We've gotten above this on a close, above the February highs here, the 222 highs, and also the 218 highs. So that's good. But we want to maintain this channel here. We basically want to hold between 12.1 and 12.4 on the Dow, and then eventually close with volume above 12.4. Ideally, I'd rather have it chop sideways here for a while before it goes through 12.4. As opposed to heading there now. Let's take a look at some oil. So the overall trend right now, obviously in equities, is still long. Let's take a look at a chart of USO. This is a chart that we put up yesterday. Today, USO was up over 2%. But if we look at this on a monthly chart, and this is a post that we put out yesterday, we can see that possibly we're going to take a run at 48 here. We have our stop right around in the 39 area. But this is resistance that we have back as far back as 2007. Okay, let's take a look at a daily chart of OIH. We always look at that each week. Let's just do it weekly. OIH. This is what it looks like right now. We wanted to get above 160 last week, so the overall trend is still long. Let's bring this down to a daily chart. Now, what happens often, this is what's happening in our position in coal, is once you break out or a position breaks out of a base, often it will come back down and test the breakout area. If it does it too many times, if it hits it too many times here, let's say 160, it's going to go through it. You're going to want to exit that position. But right now, the overall trend is still long. We are above the 50-day moving average. We are holding a trend line here as well. Let's take a look at bonds, specifically the 10-year bond, TNX. And you can see that one of the lines in the sand that we've been looking at is 3.6. We feel that if we were to close above this candle, on the high there was 35.95. That is very bullish for interest rates to go up and bonds tied to treasuries to go down. Today we traded as high as 361, almost 362, but we closed at 357. So we'll see. When we take a look at IEF, which is a long bond ETF, you can see that we've been breaking down. Initially we got above this downward sloping trend line that was bullish, but now we're down below the 50-day in support. We could possibly test 91.20 or even stop falling in this area here. But I don't see it being anything more than a dead cat bounce at this time. Maybe back up into the 50-day moving average. Same goes for corporate bonds, LQD. You can see that we've been breaking down the last couple of weeks here. We are below the 50-day moving average, but we may catch support here just below 108. One that looks a little bit better, but we still haven't pulled the trigger on it yet, is the high yield, which is a JNK ETF junk. And again, I'd probably want to see a close above resistance here of roughly around 40.75, 40.70 in that range. If we get above that, we'll probably pull the trigger there. A good dividend there, a good yield. We would have our stop very close though, just under this candle, which is very close percentage-wise. Let's also take a look at metals as we do each week. We had a hedge on here because meaning gold was unable to get through a December high that it put in, and it was trading basically in a range for several weeks, 3 months, and then finally we broke through this week. We removed our DZZ hedge, and gold continues to catch a bid here. And metals is what has kept the managed accounts in the black today, along with a little short hedge that we put on yesterday. Even though the market was down, we were in the black today. USO, again, I mentioned we have that. We just added that. Looks really good on a monthly chart. We'll see how that pans out. We do have a position still in the managed accounts in coal. I put this out yesterday. We want to see it hold this area here. If this is a dead cat bounce and we hit the breakout area more than 2 or 3 times, we will let it go, hopefully at no less than a break even. The other things that we're looking at, we're looking also at copper at this time. This just broke out the last couple days above the 50-day moving average. If we were to draw a downward sloping trend line in here as well, it just broke above that. So we can kind of do something like this here. It did break above that, and that is a good bullish sign. What I really want to see at this time is it continue to move higher. I do like the fact that it broke above this area of support here just today, as a matter of fact. A little bit weakness in the volume, but everything is weak right now in terms of volume prior to earnings next week. When we look at the transports, the old Dow theory, big down day today in transports, mostly due to high energy prices. But we did come back down. We do not own this position. We did come back down and test the area that it most previously broke out of, which would be right around this 94.40 area in here. We'll see if it holds. I would probably sit out unless we got a close above 96.80 on the transports. Let's also take a look at the NAS again. Again, we want to get above 2,800 on a close. We talked about this the last couple weeks. We got as high as 27.99 on a close on Wednesday. We actually traded intraday at 28.15. But essentially what we could be doing here is coming back down to fill this gap. And very similar to the S&P 500 and also the Dow, we want to maintain this tight trading range over here and then eventually break out of a W or an inverted head and shoulders. One position that we did put on yesterday in anticipation of a little bit of a fade here or weakness in the equities, even though we're long equities because the trend is long, is yesterday I went into the managed accounts and just bought a little bit of the VXX here, and that was up today 1.90%. So we'll see. What I've done is I have a stop under the low, 3 ticks under the low that we put in today, a mental stop. All right, you guys, that's it. The overall trend is long in equities. It is short in bonds. It is long in energy. It is long in metals. And we'll talk more about this tomorrow on the radio show. Thank you, and we'll see you next week.